dominance of the dollar is now under threat. More and more countries are looking for alternatives, and China's yuan is emerging as a clear challenger.
It's happening around the world, and all of it is shutting out the US dollar.
The de-dollarization campaign, it's a real thing now. Even American banks can't ignore it.
You'll be able to tell your kids about how the US dollar was once the strongest currency in the world, and you were there to watch it fall into ruin. You'll be able to explain to your kids that it was all self-inflicted, how arrogance, greed, and bullying led to the collapse.
The dollar's impending doom.
And some nations are already moving away from using the dollar for international business.
Amid concerns over a sluggish economy and rising inflation, doubts have emerged about the stability of the US dollar. Headlines have also surfaced regarding the BRIC economies seeking to establish a competing currency and advocating for de-dollarization, especially in oil and commodity trading. While discussions on the dollar's collapse occasionally make waves, the reality is that the US dollar continues to maintain its role as the world's leading reserve currency. Although there may be marginal declines in dollar trade, a complete demise of the dollar lacks credibility for three primary reasons. Majority share of global reserves held in US dollars. The US dollar remains the dominant currency when it comes to foreign exchange reserves held by global central banks. These reserves serve various purposes, including trade payments and currency support if necessary. Although the percentage of reserves held in US dollars has somewhat decreased over the past few decades due to the relative size of the US economy in the global landscape, it still constitutes nearly 60% of global reserves. The euro, the second largest reserve currency, accounts for about 20% of reserves. In comparison, other currency reserves are relatively small. For instance, the Chinese renminbi represents a mere 2.7% of global reserves as of 2022. Dominance in global trade, including oil trade. According to the Federal Reserve, between 1999 and 2019, the US dollar was involved in 96% of trades in North America, 74% in the Asia-Pacific region, and 79% for the rest of the world. The only region where the euro took precedence over the dollar was Europe, owing to the existence of the Eurozone. Furthermore, US dollars still largely facilitate global oil trade, which constitutes approximately 6% of overall trade. Although the dollar's influence in this sector may diminish to some extent, it remains a relatively small portion of global trade and may continue to be used in certain transactions. Deep, liquid, and regulated financial markets back the US dollar. The strength and stability of the US economy, coupled with the deep and liquid financial markets it offers, have played a significant role in establishing the US dollar as the dominant global currency. The United States boasts the largest bond and stock markets worldwide, and these financial markets are highly regulated, providing borrowers and lenders access to a broad range of counterparties. Overall, the U.S. remains the world's largest economy with the most extensive capital markets. Realistically, there are currently no alternatives poised to replace the U.S. dollar in the near future. The euro has faced political risks in the past, while the renminbi is hindered by significant capital flow restrictions imposed by the Chinese government. These factors have enabled the US dollar to maintain its dominant position in international trade and finance, and are expected to continue to do so for the foreseeable future. In conclusion, while occasional headlines may raise questions or concerns about the US dollar, there is no credible threat to its global leadership. Fluctuations in the dollar's value relative to other currencies are normal within the realm of financial market volatility. During turbulent times, such as the recent pandemic or concerns over inflation, investors have sought the safety of the US dollar, indicating continued confidence in its stability. What does this mean for investors? Based on the current situation, we do not recommend making portfolio shifts solely based on fears surrounding the US dollar. However, we advise investors to consider diversifying their portfolios by including exposure to markets and currencies outside of the United States. This can be achieved through investments in international equities, bonds, and sectors with global exposure, such as industrials and materials. Such diversification helps reduce reliance on the US dollar. Historically, international equities have performed well when the dollar weakens against other currencies, while US investments tend to outperform when the dollar strengthens. Over the past decade, the dollar's rise has weighed on international returns, but even a modest decline in the dollar could potentially lead to improved relative returns. Therefore, an appropriate international allocation is likely to benefit from any softening of the dollar, which may occur as central bank policies diverge or global growth rebounds. In the past year, the Federal Reserve has raised interest rates earlier and more aggressively than most global central banks, exerting upward pressure on the US dollar. However, with inflation moderating in the US, the Fed might pause rate hikes and pivot to rate cuts before other major central banks, potentially reversing some of the dollar's recent gains.